So we are here in the session where we'll be elaborating the subject of recently introduced merger incentives regime. I have with me Mr. Sotiris Gioussios, senior partner and one of the founding members of the Grand Thornton Greece. He's head of the tax services. We have currently a bill to be adopted. There is a tax bill that offers incentives for companies so as to be transformed. What is the aspiration of this bill? Well, this is a bill that has been, the consultation process has been completed, and we hope that by the end of December it will have been adopted. What this bill aims at is to cover transformation of SMEs and also, and mainly, if you like, personal companies, as I've heard from the previous colleague. The previous law does not cover all these very small companies or perhaps individual ones. It's not that clear. From surveys conducted both by the Ministry of Finance, actually under Mr. Vasilis. No, I didn't mean that. I'm sorry. I forget the name. No, that's not important. Anyway, the surveys conducted have shown that SMEs in Greece are quite smaller than the average European SMEs. You meant Mr. Pisaridis? Yes, the Pisaridis report. Yes, not Pitsilis, Pisaridis report. I'm sorry. I mixed the names. I apologize from both authors. So there's an effort made for these very, very small SMEs to cooperate so as to create economies of scale. So there's an issue here. Whom does it concern? I ask that because in Greece we have very small companies, small and SMEs, but not at the level of the European standards. That is, when in Greece we speak of an SME, it is really small. It's not like a European SME, far smaller companies at the level of the number of employees and turnovers. So whom does this transformation concern? I suppose that the tradesman of the mini market of the company, a small market, does not concern him, as I hear. It regards other companies. No, this is not so. First of all, what the law does sets a ceiling that this law cannot be used by companies that have up to 250 employees and 50 million euros of turnover. The companies that are to make use of this cooperation, this cannot be companies who have more than 50 employees and 10 million euros of turnover. What you say about the mini markets of the neighborhood, yes, we have to have some a threshold of turnover of 450,000 euros. Also, the nature of the company. How can a mini market converge and, if you like, merge with another one? Because I say that schematically because this is what one has in mind. Of course, there are also other small companies, small cottage industries, a lot of things that one may say that where they can combine forces. Well, listen, this case is a bit difficult, this fragmentation of small shops. Well, unfortunately, we are currently at a situation where our economy, all those small companies are moribund. They will be extinct in the medium future. Yes, but let us see in practice. Whom does it may concern? Let me cooperate. I will merge. I will find a loan, enter the RRF. Who does it concern? Well, listen, a new term is introduced. They are the classic transformations between companies, big or small. But here, through the new bill, we have a new term called cooperation. What does cooperation mean? It means a kind of merger in a new business entity of companies under certain conditions. One condition is to have a contract agreed between the two, which will contribute will have to do with agriculture or franchising or any other object, that these companies would not precisely merge but cooperate. So they need some kind of agreement for that. They need a joint promotion of business activities. Okay, just give me an example. Okay, let us see in action who can say that we cooperate. They might be all small professionals, individual companies, small companies, personal companies. Proceeding in such cooperation, they may have created a legal entity which will be far more powerful so as to attain what you very well said, a better bank loan, better access to financial markets, get loan, yes, because most of them are exceptional. No, they do not have the necessary assets so as to get a loan. So with such a transformation, they can eventually be get credits from a bank. Yes, and on the term cooperation, they don't lose their autonomy either. It's not a buyout because this cooperation must last at least 5 years, but not there's no sky is the limit, if you like. They may extend it, but for 5 years they can try this cooperation. If they so want, they may proceed in a real merger, a real transformation. So this 5 years is because by 2025 the RRF will be over, just to say it from another viewpoint. And after having finished with the funds from abroad, we can see whether we can proceed and keep. Yes, another kind of reading of this bill. Anyway, well, after 2026, we will see there will be something else. Yes, obviously. But the point is that there are already some laws for those transformations. This new bill, will it be autonomous? Will it be complementarity? No, this would be an additional law to the existing three ones, 116, 2997, and 2642. So we'll have 2116, and additionally we have the benefits of this law. On the incentives that you said, that might be mainly the tax incentive. Yes, plus all the previous ones. It is an important incentive, giving a 30% tax break. It's important. It's a very serious incentive. Are there any other incentives? 30% is important. Indeed, a 30% tax deduction is very important for a company for 5 or 3 years. Yes, it is important. But there are also other ones beyond this tax one. No, the main one, the median incentive, is this 30% tax exemption for 3 years and for funds in the cases of transformation. Additionally, they cannot exceed 1 million euros, and in the case of cooperations, this cannot exceed 100,000 euros of tax exemption per cooperating partner. So we do have some indirect incentives, that is banks to be eligible for bank loans, to create a better scheme. So if the company is also extrovert, to have a better chance abroad, you are viewed better abroad if you have a bigger size. Of course, there's the importance of the product. Yes, of course, the greater the company, the greater the gravitas. In practice, however, how does this operate? Will Greece operate the way I mentioned? Because almost 90 plus of the Greek companies are SMEs and below SMEs. Well, listen, this 30%, it's a huge tax exemption. It's not easily found elsewhere. Additionally, they have great volume, they have economies of scale, they can negotiate better with their suppliers on far better terms. See the supermarkets, for instance. The small suppliers cannot really negotiate on the identical product. They cannot withstand and resist the great pressure that they have from big retailers. if they're bigger, they have the power to attain their goals and have stronger negotiation power. I believe that this will proceed. It's only by law. Greece cannot be a continuous exception from the rest of Europe and be left aside. And especially on the new circumstances and the development of technology, no one can lag behind. And developing in IT is something that costs. Therefore, bigger synergies are needed so as to attain to attain a better response to the new challenges of the era. Yes, you also referred to the Pisaridis report that was the basis for the Greek RRF. In our country, because we have a lot of small companies, very small schemes, which are not necessarily financially stable, do not have a strong profile. Therefore, it says cooperate, merge, so as to do something stronger and also cover the gap existing in our country with regard to the investment gap and the crisis, what has left. Yes, it's obvious. It's obvious. This is the ultimate goal. We already proceed with the development, a growth that is proceed over the next years, holds a great opportunity for these small companies to come out of the post 5-year period, which will be far better furthermore, after 5, 6 years, there will be a slide. So if you still have a fragmented market, there will be a problem. I hear, therefore, as a transition period. Yes, it is so. This is how I consider it. We exceeded a little bit the issue of the law, but it is a transition period because now lots of money is inflowed in this Greek economy on the basis of this very law, because the big schemes are exempted, if you like. They have other kind of laws to abide to. Yes, you told me beforehand, but this will not operate autonomously. But there's another question: whether there will be changes in the amendments in the previous laws. Yes, there will be important amendments introduced through this latest bill. The following four mainly. First, now, it is stipulated that there will be tax exemption in the concentration of capital according to those measures, according to laws 1297 and 2166. There was no tax exemption in the past. As you know, this is a very specialized, yes, issue. It is 1% on the capital used on the new equity and so forth. Another important element was the transfer of damages of the merging companies. To date, it's only in 1 out of 3 laws that we had that. Now we have transfer of damages of transformed merging companies in the new one. Third, a new disposition is introduced that will greatly assist companies that will be transformed and would like also to proceed in a change of their equipment. Therefore, there's an exemption from a tax exemption from the sale of fixed capital. Therefore, the fixed capital that will be created after the merger can be sold with tax exempted. And another important element, most important, which is of concern, is the exemption of all expenditure connected with buyouts. Currently, if a company wanted to make a buyout, the taking banking loan, the interest rates are not exempted. Now, through this law, this expenditure will be tax deductible. So there are generous incentives, direct and indirect, regarding mergers. The point is whether that will be a smooth operation for a company to do for such a cooperation or merger, if they so wish. Reading this bill, that will it be effective? Well, listen, there are no details in this bill, but we see the spirit of the law, that it will be a simple process, because this is precisely what we are aiming at. Well, a simple process will not be just 3 simple steps, Because when we say that there are three laws of the past, well, we've got a fourth one now complementing this, and we will have to have recourse to the previous one so as to find a way around it. Will not be that easy. Well, no, yes, perhaps, but but these two laws have been existing and been around for many years. Therefore, everybody are accustomed and familiarized. All the consultants have examined every case, and they do have the know-how. There's no problem in that. Do you consider, in conclusion, that there will be response to that, not only from the viewpoint of companies, but also to have it operative and bring about specific practical results in Greek economy? Yes, I believe that it will be vividly embraced by many companies. Already, the young businessmen are very different from the previous ones, want the new thing, want modernity. They want to be law abiders, and they want to have advantages vis-à-vis their competitors. And this is an excellent opportunity. And if there's also incentive offered, makes it even better, because without an incentive, no one will respond. Thank you for the discussion. This is a sub-subject. It is a bill under discussion, that's true, without being greatly aired as yet. But things get clearer, we'll have a better picture, and those who are interested will also have a clearer picture. I warmly thank you for these two panels that I coordinated. I wish you every success in the continuation of the forum. Thank you.